welcome on this edition of Budget Pe Charcha on Times Now. I'm joined by Mr. Mohandas Pai, who is Chairman Aaron Capital, somebody who represents the industry not just in Karnataka but across India. Thank you very much, Mr. Mohandas Pai. Always a pleasure to have you on the show.
Thank you.
Let's talk about Budget 2026, which is expected to be very crucial for India's ambition to become Viksit Bharat by 2047. Our macros are looking good, high growth, low inflation, but there are plenty of external challenges. Foreign flows are going down. There is a Trump factor. Amid all of this, in your opinion, what should be the priority of the finance minister in this budget?
Well, like you said, the economy is doing very well. We are growing at about 6.5–7%. That's pretty good. Inflation is down. The banking sector is in great shape. They have enough capital. Deposits are okay. We invest more than $1 trillion in capex in the economy. Government investment, both state and center, could be around $350 billion. And things are going well. So I think despite the external shocks, the external shocks are beyond our control. They're beyond our control. And I think it's important for Indian industry to learn how to adjust it. We have President Trump who decides what he wants to do every day in the morning and tweets. And we don't know what he's going to do tomorrow. And then we have some oil shocks because of events in Iran and Venezuela and other places. But nevertheless, I think we are at a stage when we must really take some good, strong measures to meet the challenges of the future. To me, the biggest challenge India has to create enough good, high-quality jobs for our population. Now, between 1990 to 2010, we had 50 crore young people being born, 50 crores. All of them are coming into the workforce or are in the workforce. Every year, we'll have 2.5 crore young people coming into the workforce because we are producing 2.5 crore babies for 30 years. They're all coming to the workforce. Maybe 1.82 crore young people want jobs. And we are producing about 1.3, 1.4 crore jobs as per EPFO. But 80% of jobs pay less than 25,000 rupees a month. That is a big challenge. So we have to focus on jobs in this budget. And what I would suggest is to declare the poorest 350 districts of the country as special employment zones and tell industry that if you employ somebody, we'll give you 2,500 rupees a month for 2 years, that is 24 months. And we'll also pay the ESI and PF for the formal labor. Second, we have to invest 20 crores a year in the 5,000 small census towns of this country so that we create good infrastructure and they become nodes of growth. And I think it's urbanization that's going to determine the future of India. Villages cannot determine the future of India. And the third is, for all the top 10 cities, give them 5,000 to 10,000 crores a year to build infrastructure, especially mobility. Because we have to make our urban population more productive. We are creating wealth, we are generating taxes, but the pain of living has gone up tremendously in India because of increasing prosperity in the last 10 years. I think this is a big thing that must be done. Second, we have a very big challenge in the economy. If you look at all $4 trillion economies, United States, China, Germany, Japan, India, less than 4 trillion, UK and France, all of them have a cost of capital between 6 to 9%. India has a cost of capital 11 to 12%. The 11 to 12% means a larger part of the value add will go to pay interest and to financiers. We are paying 15.4% of GDP as interest every year as per our estimate. And this cannot go on. So we have to bring down the cost of capital to maybe 8 to 10% in the next 2 or 3 years. And for that, it's important we relook at our policies. We have to create more liquidity at the short end of the yield curve. RBI has to cut its rates. I think government borrowing should come down to maybe 5.5% a year for 10 years. Then you must reduce the India risk. The India risk premium is 4 to 5%. And people demand high returns. And I think for that, we must make sure tax terrorism goes away. Today, there's an article by us in Financial Express talking about tax terrorism. There is 28 lakh crores of tax disputes stuck up. Jaitley promised in 2014 he'll remove tax terrorism, but tax disputes have gone up from 5,25,000 crores to about 14 lakh crores between 2014 to 2025. And I think it's important to bring it down. Second, we must improve the judicial system ability to deliver justice. Within 3.5 years, you must decide commercial disputes. You see what happened to JSW, you see what happened to Vodafone. And the third important thing is there must be policy stability. Government promised no retrospective amendment. When they amended the tax laws for the indexation, they amended it for retrospective effect. He said, we reduce the tax, so this will go. Maruti paid 800 crores, I think. So I think that is important. Second one is important, that the policy matter. And the third one is to develop more infrastructure and better.
Okay.
We need high trains. So I think these are the three focus areas for the budget. Now, the external shocks, I think we'll do. But the last point I want to make is, I have got a message for India Inc. If the top 500 companies believe they can grow 15-20% a year for the next 5 years doing business in India, they're very mistaken. India is becoming too small an economy for the top 500 companies. So they must export. All of them must export outside because the global markets have a GDP of $120 trillion. Our GDP is $4 trillion. So you must export if you want to grow 15-20%. And that's the message. And that is what we must do. And we must incentivize them by better infrastructure, cutting down all kind of unnecessary regulations by RBI and in the ports.
Okay. You know, you've listed some very, very interesting issues that the government can really address in this particular budget. Job creation was the first thing that you mentioned. In fact, yesterday only a report came out from World Bank saying that world faces massive jobs test as 1.2 billion young people are near working age. So clearly our focus must be on job creation. There was some focus on job creation a couple of years ago as well. But what more? Is there any big, bold idea to boost employment in the country that, you would like to give to the government?
Look, to boost job employment, what is the problem? The problem is jobs are being created first in South India. Jobs are not being created in North India except UP. There's a lot of migration coming down. Second, jobs are being created in the urban areas, not the rural areas. Right? Now, this is a problem that we must tackle. Jobs are being, that's why I said, in the 350 poorest districts, where there's good road transport, power, incentivize labor-intensive industries by giving them an incentive. 2,500 rupees a month for every job for 24 months. That will take care of training and everything else. Then develop the smaller towns. See, when a small tier 2 town, 50, 60 kilometers from Bangalore, and there's a village nearby 20 kilometers, set up an office there and improve the quality of life there. And the third, in the big cities to make them more productive, imagine that instead of spending 3 to 4 hours on commute, you need to spend only 1.5 hours. Look at the productivity benefit. Put in money for mobility, put in money for metro, put in money for roads, for public transport. Do the three things and jobs will automatically come because productivity goes up. I think these are the three things to do. Jobs are being created, but the cost of jobs is too high. And jobs have to be created where labor comes. Now, labor-intensive industries cannot pay salaries in urban areas. Bangalore has 800,000 people in the garment industry. Bangalore is an expensive place. Why can't you have a garment industry 100 kilometers from Bangalore in a smaller town where labor is cheaper, right? And people want these jobs. Getting 8, 10, 12,000 rupees in a smaller village, near a village is pretty good every month. I think we must have a proper policy to incentivize job creation, incentivize labor-intensive industries instead of incentivizing capital industries. You set up a refinery with 1 lakh crore, you may probably get 30-40,000 crore of subsidies. Right? They create only 5,000 jobs, or every 1,000 jobs will be good jobs. So we must get mass employment.
But why do you think North India is not really able to generate enough jobs?
Well, North India is not able to generate enough jobs because the educational accomplishment of people is less. The gross enrollment rate in education in Bihar is about 17 or 18. UP is 26. Rajasthan is 24. South India, Tamil Nadu is 49. The rest of the South is 36 to 38. Right? And there is a lot of social, let's say, social assets in the South. Good education, good schooling, good towns, decent infrastructure, and the technology industry is there. It's not well developed there. UP's per capita income is 1,17,000. Karnataka is 4,25,000. Tamil Nadu is 3,85,000, right? These are developed states with ports. People will come there and people will go and invest where there is enough infrastructure. So we need infrastructure. Look at UP. UP is transformed. A lot of industries are coming there, right? Now in UP, we need industries in Bundelkhand in the east of UP. Now with the Ganga Expressway opening shortly, the west of UP and east of UP will be connected. That means Bihar too will develop. Look at Bengal. Bengal is the last cause. All there is about all kind of unnecessary stuff happening there in the politics, right? At least Bihar is developing. And a lot of infrastructure come in Bihar. We need industry in Bihar. But who will come there? There's labor there. Why don't you intensify labor-intensive industries? Then other industries will come there. Urbanization should happen. Urbanization in Bihar is very poor. I think urbanization in Bihar is maybe 18-20%. In the south, it's about 40 to 45%. Develop the small towns, give them connectivity, there's labor. So we have to think very strategically like China did. What did China do? When it opened up in the east, in the coastal areas, and gave them an SEZ, where the entire district was an SEZ. First, labor-intensive industries, then they build some capital-intensive industries, and then they build universities, then they build technology. Now they're building, deep tech, right? And look at the quality of jobs in infrastructure. We have to follow that. And we are labor surplus. Labor is the biggest asset. Why can't we manufacture labor-intensive goods and export to the rest of the world? Okay. Why can't labor-intensive industry become the most competitive at a time when wages in China have gone up 4x in 10 years? And all around the world, there is a shortage of good labor. India is a labor surplus country. And now incentivize labor. Rest of the industry will take care of itself. They don't require incentives. Okay. For them, reduce the cost of capital. If the cost of capital comes to 8 to 9%, infrastructure assets become useful. Okay. Do you know that NTPC gets 14% post-tax return on equity for a power plant? 14%. It's too high. We're all paying through our nose. And power grid gets 14%. Bring it down to 9 to 10%. But the cost of capital borrowing is got 10-year bonds. Okay. Actually come to 7% for the corporate sector. So we have to do all this because we have grown to 4 trillion. And the future is going to be very different from the past.
Absolutely. Mr. Mohandas Pai, some say India is losing more people and attracting a lot less money than it used to. And it is a sign of weakness. What are your thoughts on it in terms of the issues that must be addressed, perhaps by this budget or some policy intervention immediately?
Well, I don't know whether the budget will address it. See, India is losing people because 90% of young people want to emigrate. We have 1.3 million young students in outside India studying in the US and all other countries, out of which not more than 10% have gone there for genuine education. Rest of them have gone there to emigrate to get jobs because they all believe they won't get good jobs in India. And India's labor surplus is going to happen. That's why we got to create enough high quality jobs in our cities. But those jobs are there. Second thing, what we have to do very clearly is improve the infrastructure and the governance in this country so more FDI comes. Now, we are getting $82 to $85 billion gross FDI, gross. But in the last 2 years, many of these PE funds are sold out, taken out $25, $30 billion. This year also they're selling, taking out money because the stock markets have got very high PE, very high valuation. Why should Hyundai raise money in India? Why should LG raise money in India? They come from a capital surplus country. They do it because they're making a lot of money in selling the stock and taking money out. And that will happen. But what we need to do is we have to incentivize long-term sovereign funds, long-term pension funds by reducing capital gains tax for them. Now, the government of India and Delhi doesn't understand one thing. They think, oh, Mera Bharat Man, the whole world is coming here. Whole world has got options. America is rocking, right? The stock market is giving them bumper returns. All the big AI companies and the tech companies are giving them 20, 25% return year after year. Why will that money come here? What we should do is we should understand our currency depreciates 3 to 5%. Right? In dollar term, even if you earn 15%, is like 11.5, 12%. Second, there's the India risk premium because of uncertainties, tax terrorism. Reduce all that. Exempt them from long-term capital gains for pension funds who don't pay capital gains in the home country. Exempt them for sovereign funds who don't pay capital gains because they're owned by sovereigns. And for other funds, have a very nice tax regime with lesser tax so that they can invest and bring in dollars. So the return that they get makes up for the currency depreciation. Okay. I think these are important things for Delhi to understand very clearly because they're on a different league. And if you don't do that, see, most investment vehicles in the West are pass-throughs. They're pass-throughs. But if taxing a pass-through, don't tax a pass-through. Our mutual funds are not pass-through. But the people who own the pass-through stocks are pension funds and pensioners who invest for the long term. So let them take the money out. It doesn't matter. There'll be long-term players. Incentivize. Right. We need to change many things.
But sir, the other argument here is that the government can provide policy support. The government can provide incentives to corporates. I mean, corporate tax rate is much lower than the individual tax rate.
Yeah.
Isn't it also the responsibility of the private sector to perhaps do something to, help in this job creation movement in the country? Is it only the government's job to create jobs?
No, it's not the government job. Government cannot create jobs. Government can incentivize job creation. But they're doing, they need to do this in the labor-intensive, poorer district and others, like I said. But what we need, our corporate sector is highly profitable. Let me give you some data. Okay. In 31st March 2025, the total corporate tax paid was 12,75,000 crores for the year. Okay. Before refunds. 12,75,000 crore, assuming effective tax at 25%, pre-tax profits will be 51 lakh crores, listed, unlisted. 51 lakh crores on 31 lakh crore GDP is 15.4%. Pre-tax profits in India are 15.4%. SBI is earning 20% return on equity post-tax. Bajaj is earning 24%. The auto company is earning 13 to 15%. That's too high. Banks are earning 4.5 spread, 4.5% spread, 4% spread. That's too high. We have created a rent seekers economy where there's no competition. Why don't you reduce tariff rates so that when importers can come and sell us some good stuff and don't need too much protection? Indian industry's got too much protection. Like our Sajjan Jindal said, our steel industry earns 13 to 15% operating margin. China earns 4 to 5%. Now we should earn 10 to 11%, but let them earn on efficiency. They're learning because of high tariffs. Reduce the tariffs, so costs come down for us in multiple areas. Export Indian industry to greater competition in multiple areas. And I think that's what we've done. Look at the auto industry. The cars are very expensive for Indian conditions, right? Look at the profits they make.
Right.
They're not investing enough money. I think, see, the key message is government should tell the industry, invest and become efficient. We're going to reduce tariff and allow foreign competition to come. Point number one. And second, Indian industry should understand you can't grow 15, 20% a year after year unless you export. This market is too small for you, right? Car industry can go 5-8%. 5-8% is very good. We are selling 4.5 million cars.
Right.
We can sell another 500,000. Why can't they produce 1 million more and export? Export is happening. We exported 890,000 cars last year, about 3.6 million two-wheelers. I think that's a good thing. They're all learning to export. And the government must talk and tell them, please export, please grow faster, and we must get a culture where this happens. For that, RBI should relax the regulations. Regulations are onerous. They threaten you with ED. If you don't get the money in time, they control you. To do all that must come down. Second, they must allow us to invest overseas too. Overseas investment is a mess for you and me, not for industry. That's important. And the third thing is they must reduce the cost of capital in India. I think that's very important. Our ports are doing very well. Cost of logistics come to 8 to 9%. The latest report is up, which is the good news. But I think there must be a talk from the government, export, export, export. Tell us what you want, we'll do it. And then monitor it and tell them. Because, industry has had too much of too good at things, making huge money in India.
Absolutely. So
they have got fat margins in India, so they don't want to export at lower margins. But they don't understand, if they don't export at lower margin, they'll not get the benefit of scale and become more efficient.
Absolutely.
Look at China is dominating the world with 30% of global manufacturing. Why can't we be 10-15% of global manufacturing?
I think
these people must become more ambitious.
I think the mantra you've given, that's very clear. It should be export, export, export. That should be the focus because there's a lot happening around the world. Let's also talk a little bit about artificial intelligence. Countries are investing heavily in AI. And, there is a race among countries to really win this particular AI race. So we are seeing countries really competing with each other. There is a lot of buzz around AI in this budget as well. Some are talking about an AI bonanza. What are your thoughts? What are your expectations?
Look, our investment is peanuts. Look, I'm very honest and I'm a tech person. I understand it well. Let me explain to you. AI has three categories. One is the large LLMs. Large LLMs are dominated by American companies because they got capital, they got talent, and they got hyperscale, data centers by which they can train the machine, right? There's nobody else in the world. Which is the AI company from Japan? No. Germany? No. France has got Mistral. China has got a DeepSeek and others, but China invested $150 billion for the last 7 years. Government invested. And they're a $20 trillion economy. So in that area, India is not there. We have to admit India is not there. We cannot be, we got no capital. Government has got a $1.5 billion AI mission. $1.5 billion over 5 years? What are we talking about? China invested $150 billion. America is investing $2.5 trillion in hyper cloud and everywhere in 3 years. So what are we talking? Do we stand a chance? No, because there's no capital coming there. Second layer is about vertical LLMs and agentic AI for business where we will dominate. Our software companies have all trained the people. We have the largest number of AI trained people for enterprise in the world. All right? About 4.5 million. Then all the software companies, TCS, Infosys, Wipro, they're creating vertical LLMs and they're working with the clients. Clients are beginning to spend now. I don't know what Infi is going to talk today. We got to see. TCS said it's happening. HCL said it's happening. And we'll see more spending next year from AI. So they're going to do well helping global enterprises use AI with agentic AI. And Infi said last time that there's been a 15% improvement in productivity. So quite possibly they may not hire young people at the same pace, but productivity gains will be 15-20%. They'll continue to do well. The third layer is application AI, where there are hundreds of small companies which are coming up, which need capital. Our biggest challenge, lack of capital, because innovation requires capital. Where is capital in this country? We've invested $170 billion into technology and startups from 2014 to 25. China, 845 billion. America, 2.34 trillion. What are we talking about? Mera Bharat Mahan. But show me the moolah. You don't show the moolah and say Mera Bharat Mahan doesn't work. And India, insurance companies are not investing. They got $1 trillion, about 90 lakh crore of AUM. They're not investing. Endowments, a college, a university endowment cannot invest in a startup. They don't allow in the investment pattern. Why don't they change that? We ask the government to change that. Please change that. Pension funds should invest in some funds at least. They're not even put a single penny. The big pension funds of 45 lakh crores AM, they're not put a penny. Because incentivize long-term investment, at least put 10, 20,000 crores into venture and startup for 3 or 4 years. All these young companies will come and grow. And we have got a small market of 4 trillion. How can you compare us the small market of 4 trillion, 50 billion local IT market with America, which has got 3.5, 4 trillion local market with with about $32 trillion of GDP? Come on, give me a break. We are not like America. Yes, we've got to be bigger than Germany because we're not like China. China, $20 trillion, right? We're the third largest digital power. But you got to give long-term money. You got to give that 1 lakh crore fund they did. 2 years is not announced. Till today, they've not released a single penny. Only now they ask for some bits. I hope they accelerate and do it correctly.
Okay. Do you think perhaps India needs an AI ministry, a dedicated ministry perhaps?
It doesn't require an AI ministry. It requires India to think big. Our Prime Minister and the Minister for IT, Vaishnav, should say, we are going to put 25,000 crores a year into AI and deep technology every year for 5 years. Minister Piyush Goyal said that, there's no deep tech in India. I protested, called him to Bangalore, we showcased deep tech. There are deep tech. And what are they saying? We don't have money to grow. Give us capital. Because they're not allowing the pension fund others to come. We don't have money. And second, they're saying the market. They come with some nice product. Who's going to buy? Public sector doesn't buy. DRDO and others don't buy. Government procurement, they don't pay you at all. Defense, they buy, but they don't pay you. And private sector is happening, they beat you down. We need a market. They have to also create a market. There has to be development, right? You got the famous video on YouTube where an Indian says, if you make innovation there in China, the PLI will come and give you an order. If you do things better, they'll come and invite you and do something. We got to have DRDO and others think big and put money to work. They can't be stingy and say, सब कुछ आप करो हम देखेंगे. आप कौन करेगा? I mean, look, it's ridiculous. And we must think big. It's a $4 trillion economy. 11,000, 12,000 crore AI mission for the last 3-4 years. What are they doing? They're given some money. Is that money enough? No. They say we'll buy GPUs. That is not enough.
Right.
Instead of buying GPUs, incentivize the big companies, the cloud companies to expand, which is happening now.
Okay.
I think in 2 years, our cloud capacity will be 3 gigawatts, which is pretty good, pretty impressive. We'll be very big in Asia after China. So the key thing is we have the talent, we need to develop the market, and we need to give a lot of funding. And funding has to come from public sources because China grew because of public sources. $150 billion, 7 years, $300 billion, government gave money for EV vehicles and solar, and they're the dominant global power. There's no other way.
Okay. One last question. What is going to be your one message, quick message to the finance minister ahead of this budget 2026, given the kind of priorities we've discussed today?
Look, I've got two. One is focus on jobs, and young people need jobs. We don't want civil unrest. We don't want young people to get upset. We want to create high quality jobs for them, and we have to incentivize and focus on jobs. That's a priority number one for me. Okay. Second thing is invest more in technology. 25,000 crores a year. Put it to work. Have a fund. And call people like us to manage the fund. We'll manage it for you. We sat on the investment committee of the Startup Fund of India in 2015. We promoted it. The startup, it did well. It led to 90,000 crores being invested. Invite people like us, not government secretaries. In that big fund, 1 lakh crore is run by government secretaries. Secretaries change every 2 or 3 years. Where is continuity? Yes, they got a full-time professor. They got people from big companies coming, but they're not empowered. Empower us. Because government thinks public money is something only they can spend. None of us have the capacity to spend being citizens. They think they can take our money, invest and compete with us. They have the competence. Do they have the competence? They don't have the competence. You have to trust your citizens, empower them, give them the money and say you invest and we'll watch. They got to work in a very different manner from what they're doing. These are two things I would want them to listen.
We leave it there. Wonderful talking to you, Mr. Mohandas Pai. Thank you very much for joining us and sharing with us your wish list for the finance minister from this budget. Thank you for joining us.